Welcome to the Microcap Manifesto Module 1. Why Microcaps? Your best real shot at generational wealth. When people ask me what I do for a living, I tell them that I'm a treasure hunter. Instead of looking for a good return on my investments, I look for something that's going to radically change our lives. Something so good, it can change the life of generations of our descendants. But I don't search the bottom of the ocean looking for sunken ships. I look in a little known sector of the stock market known as the over-the-counter market, or the OTC. This is where tiny little companies get their start, usually by taking over some unused shell corporation so they can start trading right away. The problem is these tiny little companies get almost no press coverage. You'll never see them featured on the Wall Street Journal or Money Magazine. Now that's bad for the folks running the company because their company gets almost no attention, even if they have the most life-changing product in the world. But it's great news for intrepid investors like us that take the time to find these needle in a haystack companies. The ones with a true market solution to a huge problem. The ones with honest, experienced, and ambitious management. The ones that have the potential to scale massively with eye-popping margins. That's what I look for. But they're rare. Sometimes I'll research a company for 3 years before jumping in. I talk to management, I get on airplanes and fly out to meet them. I look over their operations, look at their financials, see who else is involved in the company, and look at their potential market and their business model. And if they pass all 5 of my major filters and the overall sniff test, I jump in big and I take my subscribers with me. Typically, no matter how much my subscribers invest, I invest more. And that makes sense because if I'm the one doing the research, I should have the most confidence. I'm just letting you know I don't just recommend these companies, I invest my own money as well. Plus, if you invest big, you have the opportunity to win big. Now, sometimes, as accredited investors, we'll do a direct investment into the company called a private placement. It gives these tiny ventures the much needed capital to turn their concepts into a big thriving business. But even if you're not accredited, we can invest by buying shares on the open market, giving us a nice low cost basis and supporting the stock, giving others the confidence to buy as well. And with a great company that's performing well, we'll often do both. But no matter how we buy, all these investments have the potential to make us rich. Let me give you some examples of companies you probably already know about that have become giant Jack and the Beanstalks starting from tiny sprouts. At its IPO in 1997, Amazon traded under $2 a share. It didn't graduate from its penny stock designation until 1998. But since then, it's taken off like a rocket, cresting over 3,700 per share in 2021 for a 1,850 times return. Now, I'm not telling you that to raise your expectations to unrealistic levels. I'm just trying to point out what is actually possible with some of these companies. Another one is Advanced Micro Devices, or AMD, arguably the most successful PC chip maker right now and a household name among techies. But back in 2015, the stock traded for just $1.70 per share. Then in November of 2021, it hit a high of $164 per share. That's an outrageous 96 times return. Another example is SiriusXM Holdings, one of the biggest audio and communication companies in the world. So it's hard to believe that it once traded for just 20 cents per share, and just 5 short years later, it hit $69 per share for a 345 times return. Those kinds of returns obviously made the early investors wealthy. This is literally where billionaires come from. The good news is we don't have to do nearly that well to have more money than we ever dreamed of. The problem is, if you didn't know the founders of these companies or weren't in just the right place at the right time, you never would have had the opportunity to invest. And the same holds true for the companies I recommend. They might be available for anyone to buy on the OTC market, but if someone doesn't point it out to you and convince you beyond a doubt that the risk is worth the reward, you won't invest. And that ends up with the same result as never having heard about it in the first place. Fortunately, our subscribers have learned to trust my research. We're now heavily invested in companies with 10 to 20 or even 100 times the profit potential of our initial investment. And this isn't theoretical. We've already gotten into a lithium recycler and a miner in a range from 20 cents all the way down to 3 cents. And I've seen the stock surge to almost $5 per share in January of 2021 for up to 150 times return. That kind of appreciation turns $10,000 into 1.5 million. We also got into a quantum computing company at $1 and saw our investment surge to $25 in December of 20 for the 25 times return on our money. And it's already happening with others as you're reading this, with some of our open positions up 10 times or more, and that's no accident. There are 3 super important strategies to help make that happen, and that's what we're going to discover in our next module. Welcome to Microcap Manifesto Module 2, your 3 strategies and 5 filters away from greatness. The biggest key to success when you're investing in microcaps is to pick the right company. If you want to win racing cars, you have to have the right car. It can't break down, run out of fuel, or go so slowly you never make it across the finish line. So in talking about our 3 strategies, the first one has to be finding the right company, which I've distilled down to 5 critical filters. If they don't make it past my filters, they're discarded immediately. And that includes an overall sniff test to determine if the company really is what they say they are, with open and honest management that's willing to communicate with me. No matter how much potential a company may have, you cannot do business with people you can't trust. And I learned that lesson the hard way early on and have never forgotten it. But all that is after I've gotten to the personal investigation stage. Most potential companies are eliminated right off the bat by not making it past the 5 filters, so those are important. The second strategy is to get in at the right price. In other words, dirt cheap. The real way to value a company is not by the stock price, but by its valuation. When people talk about Apple or Tesla being a trillion-dollar company, what are they referring to? Is it their annual sales? Is it the total value of everything the company owns? No, it's none of those. It's their market valuation. That's the value the stock market has put on the company, and it's calculated by taking all the shares outstanding multiplied by the stock price. So for example, if Tesla has 1 billion shares outstanding at $1,000 per share, like it did for most of 2021, that's a $1 trillion valuation, or 1 billion times 1,000. Most heavily traded stocks are valued at 5 billion or more, but by then it's too late to make really outrageous returns. And outrageous returns are what we're shooting for. So we like to invest in companies with valuations less than 100 million and sometimes a lot less. My favorite microcap for all of 2022, for example, only had a valuation of around 20 million. That leaves us some potentially huge upside. Think about it. If this company just turns into a smallish mid-cap with a valuation of, say, 2 billion, that's 100 times the size it is today. That turns a $10,000 investment into an incredible $1 million. Can you see why I like these things so much? It's our best shot at true generational wealth, which I define as so much money you can't spend it in your lifetime because you built a portfolio that continues to grow for future generations. That kind of wealth can do a lot of good for the people in your family and your broader circle. Now, when these things finally get traction and take off, I want it to be a really big deal, so I don't invest just $10,000. I put hundreds of thousands and sometimes over $1 million into a single company. And so do some of our subscribers who have already had big wins. The beauty of this system is your first couple of victories can fuel all your future investments. So with that kind of money and share count working for you, when these stocks take off, it's absolutely mind-bending. If you've had that experience once, you'll never forget it. After a lifetime of saving and investing, your net worth can double or triple in a week, leaving your head spinning with disbelief and gratitude. The third big trick is having the patience to see these companies grow into their true potential. Yes, that might take 2 to 5 years, but goodness, the potential returns are so outrageous that it's actually a pretty short amount of time for how much one of these stocks can change your life. And that means the rest of your life. Hopefully that's a lot of years of financial freedom and with the enjoyment that comes with it. But if you get impatient and pull your money out right before the stock takes off, you'll be kicking yourself forever. The good news is I make it my job to provide the information you need to hang in there. And don't worry, if something changes materially toward the downside, I'll tell you when to get out as well. So that's it. Buy the right companies at the right price and hold on. Those are your 3 strategies right there. The first trick is finding the right companies, and that's what my 5 filters are designed to do. I'll show you what those 5 filters are and why they're so critically important to your wealth potential starting in our next module. Welcome to Module 3. In this module, we're going to talk about our first filter. How many people want what you've got? The investment world is full of acronyms, initials that stand for something. It's like a code. Once you know the code, it's like those wizards mumbling incantations. Except in this case, we're not conjuring up clouds of magic. We're concentrating on conjuring up piles of money, which if you think about it, kind of is like magic. One of those incantations is called TAM, which I always thought was a short for a tam o' shanter, a woolen cap of Scottish origin with a tight headband and a wide, flat, circular crown, and usually a pom-pom in the center that you saw some girl wearing once. Well, to my surprise, that's not it at all. TAM stands for Total Addressable Market. That means if everyone that could benefit from your solution bought it, how much money would that end up being? Let me give you an example using two drugs that are currently on the market. Brelina is used in the prevention of stroke and heart attack in patients with heart disease. It's estimated that a whopping 121.5 million adults in the US have some form of heart disease and so could benefit from this drug. On the other hand, roxadustat is used to treat anemia of chronic kidney disease. Around 37 million US adults have chronic kidney disease. So the heart drug could benefit 121 million people, while the kidney drug could benefit just 37 million. That's a huge difference. The heart drug is potentially 3.3 times bigger, so it's a really important factor to consider. Usually total addressable markets are shown in dollar amounts, but you get the idea. This metric gives you an idea of just how much potential is out there, and that's important. In fact, it's so important we made it our first filter. We want a really big market. If someone invents the best thing on the planet, but only a small number of people can benefit, it's not going to get very big, is it? No, we want to invest in companies that can become huge, even if they got maybe 1 or 2% of a really gigantic market. So think about it. Would you rather be the best player on your high school baseball team or just a competent player on a major league championship team? We always want to shoot for the major leagues, and to do that, we need a really big total addressable market. Let me give you an example that's relevant to us right now. One of our companies has been working on finding a cure for COVID, but in the process, they discovered their solution can work for virtually any virus. That means the common cold and the flu and a host of others like herpes, for example. So in that case, what's your total addressable market when you're talking about the common cold? That's right, it's every human being on Earth. I mean, who hasn't had a cold? That's the kind of total addressable market we're looking for. I'll give you another example that's more personal. When I was young, I loved art and wanted to make my living either producing it or selling it. I just wanted to be around it. Since I like to eat and pay my rent, I made the practical decision and decided to sell it. So I got a job at the biggest and fanciest gallery in the Seattle area. Actually, it's over in Bellevue. And after getting to know the ropes, I became their top salesman, earning a commission on the art I sold. And as their top salesperson, I was making a whopping $30,000 per year. After doing that for several years, I came to the conclusion that I was the biggest fish in a very small pond. So if I wanted to really make some real money, I'd be better off to be a small fish in a very big pond. Because a small take of a very big market still pays you many times what being a big fish in a small market will provide. And that's when I switched to finance, because if you're interested in making more money, it is literally the biggest pond there is. And now that is the pond we're all swimming in, which is why it's important we learn terms like TAM and other magical incantations that will help us succeed. So that's what we're going to talk about in our next module, filter number 2, investing in a company with a massive technological advantage and an unassailable moat.